When the market wobbles, people, two things, one is they start to take shots at the leaders, right? Because they try to take down the leaders thinking that's what leads us down. But the second, it really highlights the grim reality that we're about to have a third year of double-digit gains. The S&P's up 80% over the past 3 years, and funds are measured on 3-year performance. Only 21% of fund managers are beating 80% over that 3-year period. It is one of the worst ever periods for fund managers. And so they'd rather see the market fall so that it falls to their performance level. I think what's more likely, of course, is the market follows a seasonal pattern, which means there's going to be a lot of chasing into year end.
Markets are once again at a crossroads. After months of uncertainty caused by government shutdowns and weak macro visibility, relief has returned, driven by strong AI fundamentals and a resilient equity market. But beneath the optimism lies a deeper cyclical story. AI spending remains robust, with firms like Nvidia still trading at reasonable multiples relative to earnings. Meanwhile, companies such as Palantir are redefining what valuation even means in this new era of technological transformation. Yet, as markets extend into a third consecutive year of double-digit gains, fund managers are underperforming, and liquidity patterns are beginning to diverge. Against this backdrop, Bitcoin has quietly regained strength, climbing from $98,000 to above $106,000. The key question now is whether this represents a new leg higher, or the calm before the next liquidity shift.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
So the market obviously assumes that this is all going to happen, the government's going to reopen, and we're just going to get back on our merry way in the stock market. That's certainly what the trade says today. Am I right?
Yeah, I think there's a certain measure of relief because the shutdown robbed us of visibility on the macro data, and of course there's economic hit and there's suffering because air traffic is slowing. So I think for many reasons I think this shutdown was a problem for investors.
So what about now between now and the end of the year? It's the AI trade that really seems to be debated. How do you feel about it heading into this final stretch?
I think it's still in really good shape fundamentally. We know there's a lot of visibility for AI spending, and we know there's still innovation and gain of function taking place with the models. So to me, it makes sense that there's still a payoff coming. I think one of the issues that investors are going to grapple with is even though they may say AI stocks are expensive, Nvidia still only trades at 29 times forward earnings. I mean, it's still cheaper than Costco, so it's hardly a bubble valuation.
No, but I don't think when they talk about the valuation of AI stocks, they're necessarily talking about Nvidia. I think you would agree with me on that. They're more so talking about names like Palantir and some others where you could easily say, yes, their earnings have been great and the story is incredible, but at some point you're only willing to pay X for a stock, and maybe that one's gotten a little bit too rich, using that as an example of the kind of names they're talking about.
Yeah, I mean, I think Palantir is an example of what they call like an N=1 company. You've got a founder-led business developing products that really seem like magic for the companies that adopt it. So, should this just be getting a softer multiple? I don't think so. And Palantir's opening up so many markets, and if it was a venture capital firm, they'd be getting potential carry for how they transform businesses. So to me, I think that this is still a market discovering how to define the valuation model for Palantir. But to me, that doesn't mean it's a bubble. People would have said that about Tesla in 2018 because it looked incredibly expensive, and the stock in Tesla has been a huge performer since then.
But what was last week about then, do you think, at its heart?
Well, I think at the heart is the market wobbles, and so when the market wobbles, people, two things. One is they start to take shots at the leaders, right? Because they try to take down the leaders thinking that's what leads us down. But the second, it really highlights the grim reality that we're about to have a third year of double-digit gains. The S&P's up 80% over the past 3 years, and funds are measured on 3-year performance. Only 21% of fund managers are beating 80% over that 3-year period. It is one of the worst ever periods for fund managers, and so they'd rather see the market fall so that it falls to their performance level. I think what's more likely, of course, is the market follows a seasonal pattern, which means there's going to be a lot of chasing into year end.
Don't you have any concern at all about the level of money that these companies are spending on their build out and now the new wrinkle of tapping the debt market rather substantially to help do it?
I mean, Scott, yes and no. I mean, AI is proving to be a scale game. You know, it's not like you and I could start a garage and make a model competitive with OpenAI. You know, we need to have scale and a lot of chips. That's really the model that was required for telecom infrastructure and for energy infrastructure and, of course, for internet infrastructure and even fiber. So it makes sense that a handful of players are really playing a big role. And just like in the energy system, there's 8 majors. Everybody spends money on the 8 majors, and the 8 majors pay a smaller ecosystem. So I think it makes sense that that's what's developing in the U.S., and of course it's leaving other countries in the dust.
Bitcoin is back at 106, so it has had a little bit of a bounce from the low we had back in early November, where we went all the way down to 98K. So it's good to see Bitcoin with a little bit of life back in it, back above 106 or so. One of the things to consider here is, and again, I've said this before, I mean, is not about having a crystal ball, especially at this point. You know, there's all sorts of indicators that you could look at. Time-based indicators make you think that's it. Euphoric-based indicators make you think we've barely gotten started. So it depends on what you put a lot of faith into. You know, I wanna like talk about one potential view that could play out, right? And I'm not saying it has to, but I could see a scenario where it plays out like this. Because a lot of people have kind of pushed back on the idea of like, well, if this is 2019, you know, why does the cycle have to be over at the end of this year? Well, I want you guys to consider that what if, and this sounds absurd, but what if the downturn that we got in 2019 when QE started, right? So the downturn started before QE arrived, but that downturn back then lasted, I don't know, 6 months? What if the same thing happens, right? Where like QT ends and then we get a downturn in 2026. And you could argue that like the 2019 downturn that happened after QE started, you know, what if that's just the 2026 downturn? But maybe the 2026 downturn is not an 80% drop. What if it's just like a 50% drop? You know? And by the way, that doesn't even mean the high can't, I mean, the high could still be ahead of us for all we know, right? I mean, like, yes, obviously there's a chance that October was the top. I mean, at this point, guys, it's just something we accept as an outcome, right? I mean, no one really knows. But let's be optimistic, and let's say Bitcoin goes to new all-time high. I still think you're going to have that sort of that slight downturn in 2026, where you're not necessarily looking at like an 80% drop, maybe just like a 50% drop from whatever the high ends up being, right? So if it's a 126, maybe we drop to 60K. If it's 140, maybe we drop to 70K. I think what you could see happen, and this is more of a macro view, right? More of a macro view. So what if this is the way it plays out, where you have a top either in October or in sort of a best case scenario, maybe we rally back up to this trend line again, go above it, and then drop. And then we find support down here by the end of 2026. And then we get a bounce off of that. So what I'm trying to say is, you know, there is a chance here that the 4-year cycle is perfectly intact, and it manifests itself in a different way each cycle that makes people think it's not going to happen.
Beneath the surface, the macro setup looks eerily similar to 2019. Back then, the market experienced a short-lived downturn just as quantitative easing resumed. Today, we could be setting up for something similar. A brief correction once quantitative tightening ends, potentially in 2026. The comparison isn't perfect, but the rhythm of liquidity cycles often rhymes. Bitcoin could see a temporary 40-50% drawdown from whatever high is reached, only to reset for the next expansion phase as rates decline and stimulus returns. Altcoins, as always, remain the weakest link, historically underperforming during these transition periods. Bitcoin dominance continues to climb, reaffirming the market's flight to quality. Just as telecom and energy required massive capital concentration during past industrial shifts, AI and digital assets may be following the same structural pattern of consolidation and scale.
What if a lot of people end up being right? They're just, you sort of stretch the truth, right? You move the goalposts slightly so that, you have your 2019 bull market where Bitcoin leads. You then have sort of this like intermediate bear market, and then you get sort of lower interest rates, the return of money printing and stimulus checks and all that jazz. And that's sort of the next phase. But you could still have a brief downturn in 2026 in the midst of both of those moves, right? So you have your first move up there, sort of your consolidation, and then your next move up. Maybe this time will play out in the same way. You just have your first move up here, then you get your 2026 consolidation, and then you get another move up, right? Like, what if it just simply plays out like that? It wouldn't be completely unheard of for it to play out like that. I could see it doing something like that. I also want to talk about, other ways that you could view this market. And that is through a lens that might be kind of a weird one to think about. It might be kind of weird, but just put it out there. You could argue that, sort of the looser monetary policy stuff that happened in 2016, 2017 and whatnot, and low rates and everything way back then, we had this massive bull market. And then 2019 was just sort of a continuation of it where, a lot of it was sort of like an echo move where a lot of the stuff just went into Bitcoin and Bitcoin rallied on up. And then the consolidation period began until rates went a lot lower and money printing began. So you have the same thing again, right? Where you have this massive move up, and then this is kind of like an echo move where a lot of the liquidity just flows into Bitcoin. But it was bigger this time than back in 2019 because QT lasted a lot longer and rates were a lot higher, right? So what I'm saying is brief downturn in 2026, and then we hopefully pick back up. Now in the short term, with Bitcoin closing above the 50-week moving average, we have to be open-minded to, could there be something left, right? I mean, hopefully there is. Time-based indicators don't really suggest it unless you look at the ROI after the peak, but it's at least something, And I know I'm a broken record at this point, but here's the thing. In 2019, when we went through this process, Bitcoin continues to be above 10K for a long time. Altcoins were not really able to perform that well during that process. So Bitcoin continued to hold. So I know this idea might sound crazy and absolutely absurd. But what if we focus on what matters? And that's Bitcoin. And we stop putting so much attention into all these meme coin garbage crap, and Bitcoin dominance goes higher. Now, in this case, you don't have to really worry so much about what Bitcoin does, in my opinion. I mean, obviously, if Bitcoin were to dump back to 100K, it's going to suck. But if Bitcoin were to do that, I mean, alts would probably get annihilated, right? I mean, they probably would. Whereas if you do hold Bitcoin and the market does go back up, there's a really high chance dominance is going to go with it. Now, could we be in sort of a 2-week period where altcoins are getting a little bit of relief? Yeah, it's possible. We even said many times that about early to mid-November, a lot of times you get this relief in alt Bitcoin pairs. You got it in 2020 and you got it in 2017, right? It's not unheard of to get this relief by alt Bitcoin pairs in early to mid-November. The point is mid-November to early December, they're likely going to sell right back off to Bitcoin. So just keep that in mind, right? Keep that in mind that this time probably isn't different. And I've had so many people ask me why Bitcoin dominance is crashing. Guys, it's up 8 weeks in a row, It's up 8 weeks in a row. Yeah, it's just people keep drawing conclusions based on sort of drops after these wicks to the upside, but dominance remains resolute in the direction it is headed, and it just keeps on marching higher.
If this interpretation holds, 2026 won't mark the end of Bitcoin's growth, but rather a natural mid-cycle reset, mirroring the liquidity ebb seen in 2019. Investors who understand this dynamic can position intelligently, focusing less on speculative altcoins and more on long-term accumulation of core assets like Bitcoin. The broader AI-driven equity narrative remains intact, but the debt-fueled expansion that supports it will eventually demand a rebalancing. As liquidity cycles evolve, both traditional and crypto markets are converging around the same principle. Scale wins and conviction outperforms volatility. Whether Bitcoin tops in October or rallies further before its correction, the structural path remains clear. Monetary easing will return, and digital assets will again lead the charge.